Many Americans are confused when choosing between term life insurance and whole life insurance. Both options sound similar, but offer very different benefits. Today, we break it all down in the simplest way possible. Choosing the wrong type of life insurance can cost you thousands over the years. That's why understanding the difference is so important. This video will help you make the smartest decision for your situation. Let's start by understanding what each type of insurance really means. Term life is simple and straightforward. Whole life is long-term and more complex. Term life insurance covers you for a specific number of years. Most people choose 10, 20, or 30-year terms. If you pass away during that period, the policy pays your family. Term life is usually the most affordable option. It's designed for protection only, without any investment feature. You get a high amount of coverage for a low monthly cost. Whole life insurance covers you for your entire lifetime. As long as you pay the premiums, the policy never expires. This gives people lifelong protection. Whole life also builds cash value over time. This means part of your payment grows like an investment. You can borrow against it or use it later in life. The biggest difference is cost. Whole life can be 5 to 15 times more expensive than term life. That makes a big impact on your budget. Now let's talk about who usually benefits from term life insurance. Term life is perfect for families, parents, or anyone with big financial responsibilities. It protects them during the most important years. Term life works especially well for people with a mortgage. If something happens to you, your family can pay off the home. This keeps them financially stable. Parents with young children also benefit greatly from term life. It ensures money is available for school, childcare, or everyday expenses. Families get peace of mind at an affordable price. Term life is easy to understand. There are no complicated investment features. You pay for protection only. Most financial experts recommend term life for the average American. It gives you the most coverage for the lowest cost. That's why it's considered the best value. Whole life insurance is different. It combines protection with savings. This offers both a payout and a long-term financial tool. The cash value in whole life grows slowly, but it is guaranteed to increase each year. This makes it appealing for long-term planners. Some people use whole life to build wealth over decades. They like the idea of stable growth and fixed premiums. It becomes part of their financial strategy. However, whole life requires a strong and consistent budget. The monthly payments are much higher than term. Not everyone can afford that commitment. Whole life is often recommended for high-income earners. They have extra money to invest, and they want to build long-term financial security. It can also be useful for estate planning. Whole life provides a guaranteed inheritance. Families with large estates often use it to manage taxes. For most people, though, the cost is the biggest obstacle. Paying high premiums for many years can become difficult. That's why careful planning is important. Now, let's compare flexibility. Term life is simple. You choose the number of years and coverage amount. Whole life, on the other hand, has more moving parts. Whole life allows you to borrow against the cash value. This gives you extra financial options, but it also adds complexity. Borrowing reduces the payout your family receives. Many people don't realize this. It can cause problems later. Term life doesn't build cash value at all. When the term ends, the policy expires. You either renew it or let it go. Some people worry they will lose money when term life ends, but term is designed for protection, not saving. It's like paying for car insurance. You hope you never need it. When comparing both types, affordability matters most. Term life makes financial protection possible for almost anyone. Whole life requires a deeper financial commitment. Let's talk about which one is better for most people in the USA. The truth is simple. For the majority, term life is the smarter choice. It offers strong protection at a low cost, but whole life has its place. For people with stable high incomes, it can be a powerful financial tool. And for long-term planners, it can offer stability. Some families choose a combination of both. They use term life for temporary needs and whole life for permanent protection. This offers the best of both worlds. Before choosing, Think about your goals. Do you need protection for the next 20 years? Or do you want a lifelong policy with savings? Budget is also important. If you want maximum coverage with low monthly payments, term is ideal. But if you can afford higher premiums, whole life offers benefits beyond protection. Let's simplify the decision even more. If you're raising kids, paying a mortgage, or building your career, term life is usually enough. If you're focused on long-term wealth planning, whole life may fit better. Choosing the right coverage amount also matters. Think about income replacement, debt, and future expenses. This ensures your family is fully protected. Make sure to compare quotes from different companies. Prices can vary a lot between insurers. A small difference in premium can save you thousands over time. Now, let's wrap things up. Term and whole life both have their place, but they serve very different needs. Term life is best for most people in the USA. It's simple, affordable, and gives your family strong protection. That's why experts recommend it. Whole life is best for long-term planners with higher budgets. It offers guaranteed lifetime coverage and cash value growth, but it requires a serious financial commitment. The most important thing is choosing something that fits your life. Your family, your goals, and your future matter most. A good policy brings peace of mind. Thank you for watching this video. If you found it helpful, subscribe to the Calm Wallet for more clarity on money, insurance, and smart financial planning. Stay calm, stay informed, and take control of your financial future today.